My name is Wesley Tucker with the University of Missouri Extension, and I'd like to talk to you just briefly about farm business and tax management. So, what's the worst job on the farm? Well, I think most people would agree it's probably record keeping. But why is that? Why do we keep records? Part of that reason I think that we dislike record keeping so much is because we keep records for someone else. Mainly the IRS requires us to, or maybe the bank does. But the reality is we should be keeping records so that we can make better management decisions and be more profitable. How do you calculate your cost of production? Most people would think about their taxes, their tax documents as their record keeping mechanism. But unfortunately, that doesn't give us a very accurate picture because we do everything possible not to pay into taxes. So we've all gotten really used to having our temperature checked this year. So tomorrow, whenever you leave the house, I want you to go out and grab that great big thermometer off the tree in the yard that's just as big as a large table platter and stick it in your armpit and try to check your temperature. Unfortunately, it's not going to give you a very accurate picture. Well, the same can be said for our tax documents. If I could convince you to do one thing, it would be to consider doing a balance sheet at the beginning and ending of each year. There's lots of free spreadsheets out there that will allow you to take that balance sheet, put it with your tax documents, and give you a much more accurate picture of your financial profitability and where your strengths and weaknesses are. I don't care how you keep your records, whether they are in something like Quicken or QuickBooks or just good old fashioned paper and pencil. I want to encourage you to think about how do I use the classes and tags to keep track of the different enterprises I have, as well as the different crops that I produce. Because the reality is we all have things that we do very, very well. And we all have a certain enterprise or a crop that if we would let it go, we would be more profitable. And then once you figure out what your cost of production is, take it over and compare it to our MU specialty crop budgets. You may not realize these are out there, but we have budgets on lots of different crops. And they are in Excel spreadsheets that you can download and put your own numbers in there. And they are really a good planning tool. I did want to mention briefly about farm taxes, and this is your farm tax planning team here. Mary Soba, Joe Kanan, and myself, we're part of the Land Grant University Tax Foundation. We give tax education for tax preparers as well as for farmers each year. The IRS puts out an excellent publication called the Farmer's Tax Guide that you can request from one of your local extension offices, or you can just print it off the web if you want. But it's an excellent resource. It's 94 pages of information that will really help you in preparing your taxes. Do not forget that ag disaster payments in Missouri, you can take off of your Missouri return, so you don't have to claim those on your state return. You do federal, but not state. And I just want to encourage you to think about how do I use my tax strategy to make the best of my operation? How do I use the tax code for my benefit? For instance, compensating family members. Do I have family members that are employees of the operation? And depending on if it's a child or a spouse or a parent, there are different rules of how I have to do those withholdings on the different family members. If I'm a corporation versus a sole proprietorship, there are different rules by which I must follow. But I just want to challenge you to think about, a lot of people haven't thought about, can I pay my children and how does that work into my strategies? So for instance, if I'm a sole proprietor and my child is under the age of 18, they don't have to pay into Social Security, Medicare, or unemployment tax. So that only leaves state and federal tax. But realize that this year with the standard deduction being $12,550, your child can actually make $12,550 without having to pay any state or federal income tax. Now realize any employee that you pay over $150, you are required to do withholdings on them. But guess what? If you do it correctly, if they fill out their W-4 and say, I don't think I'm going to have to pay into tax, so I don't want any federal and state tax withheld from my check, you don't have to. So if you do it correctly, this can be an excellent way to reward our kids for the jobs that they're doing on the farm and also give them money that they can even go put into a Roth IRA or something like that. Realize that depreciation, we can accelerate our depreciation or we can slow them down depending on what's best for our operation. Even thinking about the difference between Section 179 and bonus, there are times where one is better than the other. For instance, if I have a vehicle that I use for both personal and business use, then if I take Section 179 on that and my business use drops to 50% or below, I have to go back and recapture all of that accelerated depreciation I took. With bonus depreciation, I don't have to recapture it until I sell the vehicle. So there's times that one is better than the other. Even thinking about donating assets. If I sell $10,000 of something, I'm going to pay almost $3,300 in tax. If I turn around and donate that $10,000 cash and I'm able to itemize, I will get the federal and state back, but I still have to pay into self-employment tax. With the doubling of the standard deduction, most of us no longer are able to itemize. So even though we donate that $10,000 of cash, we still end up paying that $3,300 in tax. However, if I do it properly and I donate that stuff prior to it being sold, I put it in the possession of the charity where they don't even have to have physical possession, but I say it's yours and they get to decide when to sell it. I can even keep hold of it and sell it for them. But if it's theirs to decide when to sell, I save all of that tax. So essentially my charity gets $10,000, but only $6,700 of it really comes from me. Uncle Sam contributes the other $3,300. So those are just some things to think about that people often don't take in consideration, just like self-employment tax. Depending on whether you want to pay into Social Security or not, but we can set up the farm in ways where maybe the ag enterprise rents the land or some of the assets from me as a personal, so that way the rental income is not subject to self-employment tax. There are always strategies of ways that you can use the tax code for your benefit. And I just want to encourage you to think about that. So again, in closing, Dave Pratt, I've heard him talk about this before, says we spend all our time working in the business and we don't have time to back up and work on the business. So I just want to challenge you. Are your records something that you always do for someone else, or are they something that you are doing for you so that you can make better management decisions? Again, my name's Wesley Tucker with University of Missouri Extension. There's my contact information. And if our farm tax team can be helpful to you, feel free to reach out to us.